So ladies and gentlemen, for this, and exactly at 11:45 we begin the next session. We're talking about, first up, our moderator, co-founder and CEO of TransBnk. Let's warmly welcome Vaibhav Tambe to kindly join us. Next up, Executive Director, Broadridge, India, Kishore Seshagiri. Let's give him a warm round of applause. Global Head of Coin Systems, Onyx by JP Morgan, Naveen Mallela. Naveen, thank you so much for your valuable time. Head of Fintech and Payments Fund, HBAR Foundation, Sabrina Tachdjian, if that's fine. Would you like to correct me, Sabrina? Tachdjian. Okay. Give her a big round of applause. We're learning from each other, different cultures. Let's acknowledge that. CEO of IBBIC, Ashish Singhal. Let's give Mr. Singhal a warm round of applause. Well, ladies and gentlemen, on that note, we begin officially with our next session. Over to Vaibhav to take it forth.
Hello. Thank you.
Thank you so much, Vaibhav.
Yeah, thanks everyone for joining. And of course, we have got an amazingly diverse panel and a lot of things to be spoken about. So probably we'll actually, we have actually seen 20th of August, Mr. Mukesh Ambani talking about the importance of blockchain and how that's going to be a very crucial thing. And at the same time, of course, as a banker in my previous avatar, we had seen, one of the initiatives where we worked on Ripple for cross-border, right? So probably what we want to today talk about is how do we really, first of all, do we really need the blockchain technology? And of course, we believe it does. How do we harness that for secure and cross-border transactions? So probably I would want Naveen to talk about how exactly this space has evolved, especially the cross-border technology.
Yeah, hello everyone. Thanks for having us. So in terms of how the space has evolved, Vaibhav, I think the space has not evolved at all, right? I think that, when you look around, right, driverless cars are here, nuclear fusion is being solved, but cross-border payments is still stuck in the 70s. I don't think cross-border payment has changed ever since the advent of SWIFT. The basic construct of a cross-border payment through correspondent banking from one account to another, coordinated through SWIFT, that's not changed for 50 odd years. So I think that this space is ripe for disruption. There's been a number of sort of great initiatives by fintechs in particular to work around the problem. But the fundamental issue in terms of moving liquidity at scale, cross-border, instantly, that's not been solved. And that is what we think that digital currencies, CBDCs, stable coins, all of those things can address.
So, we heard respected RBI Governor Mr. Das, right, speaking about in one of the G20 event, of course, speaking a lot about cross-border and CBDC, right? Essentially, he highlighted some challenges about cost and, of course, the speed, and also on the, AML and information security. So, Kishore, maybe any other challenge you want to add on to this?
Yeah, I think AML is such an important facet of any transaction, right? And it becomes even more so when we are talking about cross-border transactions. And as Naveen pointed out, the cross-border transactions has not changed much or evolved much over many years, which means all of us have been consumers of cross-border transactions, but we do not have much of a clue of what exactly is happening behind the scenes, which is sometimes a scary place to be. And the reason why it is, as you bring up, Vaibhav, the AML aspect of it, right? And especially now in the digital world, you want to be very sure that what you're doing, who you're doing with this transaction is a person of, a reputation and not in an OFAC list or any of the lists is not wanted. That is one. So there are two aspects to making sure that the transaction that you do, especially in the cross-border, when it comes to information security and AML, Vaibhav. One is the account check, right? Be it non-blockchain technology or the blockchain technology. I believe that is a bit of a solved problem. You do have a list of people who are in some government's blacklist, and most of these governments share that with each other, right? So essentially, if you are doing illegal activities, it is very likely that there is a list that which contains your name. What is becoming a little more, convoluted and a little more tricky is the transaction analysis piece of it. Like, are you doing a transaction which may be construed as a potential dubious transaction in some jurisdiction, and especially in a cross-border world with blockchain technology or non-blockchain technology, I think that is an area where I think there are still opportunities for fintechs to really look at it, and how do we solve for that? Vaibhav, I would say that the transaction analysis, you end up trading with a counterparty who is probably behind multiple different entities, right? And it is not always clear till after the fact the transaction is made. We just before this panel when we were discussing, one of the comments that I made was like, at least the blockchain technology brings traceability to this. Yeah. And Sabrina's point was, but the transaction has already happened. So that's the risk that we live with today.
No, wonderful. I think probably that brings us to Sabrina. And first of all, for everyone's reference, thanks to Naveen and Sabrina for flying down specifically for this from Singapore to Mumbai and experiencing Mumbai traffic. Of course, that's a good experience. But Sabrina, I think taking cues from Mumbai traffic as well as what Kishore spoke, right? In your experience of traveling so much and also as a part of HBAR. Do you think blockchain is the right solution, or do you think we're too early, or because it's a 13-year-old technology, do you think we're late?
Yeah, blockchain is still a very new technology, right? And it's going through a number of iterations. So I work with the HBAR Foundation with the Hedera protocol. It's actually not even a blockchain anymore. It's kind of gone an extra iteration to solve some of the blockchain trilemma and the scalability issues. But overall, like just to generalize, decentralized ledger technology is a very powerful tool because it takes out the centralized, trusted party and takes away the weak link potentially, the single point of failure. And when you look at complex systems like payment systems that require a number of intermediaries, it makes so much sense to use blockchain or your DLT to be more general.
So I think before we hear more about how blockchain is actually transforming or about to transform this space, probably Ashish, you've been a very experienced career banker, MD CEO of a bank, and now of course you are driving one of the crucial initiatives. We've seen how NPCI has taken a leadership position globally from payments ecosystem perspective, right? So IBBIC or IBBIC, we fondly call it. How do you think this problem from your lens, right? As a banker probably, or as a IBBIC leader?
Thanks, Vaibhav, and everyone for having us over. So, all problems need to be solved from the lenses of the consumer, neither a bank nor IBBIC. And I think what Kishore mentioned, that since 70s, the process of cross-border has remained the same, is a core piece. And one of the underlying pieces is when you look at AML, etc., or any other piece, how do we establish the identity of the person to whom we are sending, so that willy-nilly we don't end up sending money to the wrong person, or to a person who is probably not part of the negative list, but still not the same person you want to do. That's one fundamental piece. And second, if you have to move away from the fact that centralized systems, single point of failure, like Sabrina mentioned, but in banking, especially when you're dealing with money, trust is most important. And hence comes in blockchain technology, where it can still provide you trust without having a single point of failure. So there's enough and more scope of things to be done there. And yeah, while 13 years could be too long, but what we know about blockchain today, and it has evolved over a period of time, and hopefully we'll have the UPI moment for blockchain sometime soon, or a ChatGPT moment of blockchain soon, where commercially it'll explode there. So and at IBBIC, there are multiple use cases which we are working on. And because it's a network, the core fundamental piece is there. How do we establish trust because of the technology and not because of the 4-eye check which is happening across multiple participants in the ecosystem? That's the core fundamental piece.
And maybe just to add on to that, right? Like, I've been, as part of JP Morgan Onyx, I've been working on cross-border payments ever since Bitcoin was at $200. So you can imagine how long that was. And I keep getting asked this question often, right? Like, why blockchain? And when you work in this space often and when you attend so many conferences, you need to have like a very succinct answer, like what's the problem that you're looking to solve? So apart from the excellent points that Kishore, Sabrina, Ashish have made, I talk about the fact that I don't think that domestic payments have come a long way, right? Like, especially if you look at it in India. I don't think there are many more problems to be solved in domestic payments. The fundamental issue with cross-border payments is because of the fact that you require cross-jurisdictional trust to be established. That is where distributed ledgers come in, right? To create the trust amongst cross-border jurisdictions. The reason why SWIFT and cross-border payments have not been solved for such a long time is because each bank has their own ledger, right? Like, you move from one ledger to another to another. And that's where breaks happens, reconciliation, all of those issues come in. So we think that coming together onto a unified ledger where all banks come together on a shared ledger, creating almost like a worldwide FI ledger with central banks, that's going to be the holy grail which is going to solve for it. And we think that there are steps being taken towards that end.
So Naveen, I wanted to come to you for the another thing, what Kishore spoke about and Ashish highlighted. What's the role of identity as a factor over here, right? I think that's one of the most important vector which was solved, by Aadhaar in India, right? UIDAI has done a phenomenally amazing job. India Stack, I think everybody is aware of the India Stack story. What's the pivotal, I'm actually having, really exciting times when he spoke about UPI moment of blockchain, because we all are like very, very big fans of blockchain. I'm sure most of you here. But I think to get to that point, probably the identity problem or identity definition of that problem, I think probably would like to hear from you because you have been there, this space, and Onyx to a certain extent have solved that kind of problem. But
yeah, so again, the issue is that while we have national identity schemes, you don't have global identity. You haven't solved for global identity. Why does correspondent banking exist? It exists so that you can solve for identity for different jurisdictions. Different banks do KYC, establish identity, and establish trust. If you want to create peer-to-peer money, where, like email, you can just transact cross-border, person-to-person, you need to have a way of establishing the identity of the entity you're interacting with. That is where we think decentralized identity, global identity, will be the cornerstone of cross-border payments. So it's not just about shared ledger infrastructure. That is a critical aspect of solving for cross-border payments.
So Kishore, from infrastructure perspective, you've been actually, a very big global leader in that. How do you think the infrastructure is coping up, or it's already there?
And I think it's organically evolving, right? When we talk about infrastructure, some of the learnings that we at Broadridge, and I'm sure my colleagues would also sort of agree, is that I think apart from AI, blockchain probably has the largest percentage of projects that have failed, right? And some of the reasons is that people, while the blockchain technology does have a lot of disruptive potential, and we are believers in that, it has to be used to solve the real problems the consumer is facing, as Ashish pointed out, right? Or Sabrina and Naveen spoke about, that it has to be used for the right problems. And I think his point about shared ledger is one technology which brings the distributed trust into this, right? So when we look at how the blockchain technology is evolving organically, we obviously have the public networks, we have the permission networks, and what we have seen in the last few years is that these are converging, right? Just like any digital project is more successful, the UPI being the global success story, where there is a strong public-private partnership emerging. But we are seeing that starting to happen in the blockchain world, right? Like the public world of Ethereum, And then there are private players. We should be proud that somebody like Polygon, which is an India blockchain network, right? They're building amazing stuff, layer 2 stuff and sidechain stuff. And then there is this permission network. So we are seeing this evolution of these technology bringing together, which means the next challenge is how do these networks interoperate, which is probably where
I think,
want to head to.
superb. So, unfortunately, sometimes I get back to my banking days, so I'm wearing this blazer and all. Otherwise, you could have seen the shivers or excitement things, right? Sabrina, from the largest global bank, JP Morgan perspective or the infrastructure perspective, we've seen their views. But when you talk to fintechs, when you talk to startups who are aspiring to be there, and we have a lot of aspirants over here, wanting to build something. Do you think that the larger ecosystem players like largest bank or the infrastructure they'll always have an edge, or do you think there's a play for startups and fintechs?
Oh, there's absolutely a play for startups and fintechs. I mean, we are seeing, of course, institutional adoption and a lot of experiment, a lot of research, a lot of POCs, but institutions tend to be a little bit more slow. I mean, maybe top tier institutions will get to market faster, like JP Morgan already has something, obviously. But there's definitely an opportunity for fintechs being nimble and being able to iterate faster. Yes, absolutely.
So I think Ashish is playing that very crucial role for India. Ashish, we want to hear how you are, of course, collaborating with banks. Of course, as Sabrina mentioned, that's of course a challenge, prioritizing something like this, which is the technology of the future. And of course, on the other hand, you are, juggling with startups or fintechs, right? So how do you think that evolving in Indian landscape?
See, if you were to look at it, there are two fundamental pieces. What IBBIC plans to do through this consortium of 18 banks, and there are other members who will be users of this, is create a fundamental layer on top of blockchain, which is a core infrastructure which speaks to interoperable blockchains. But what the consumer will see is not the underlying infrastructure. Fintechs have the opportunity to develop solutions and with great consumer journeys and capture the consumer on top of this infrastructure. That's one piece where IBBIC will play a role, but all the fintechs have a role to play. This is from a consumer side. The other piece which will also happen is largely the bank's systems are still on Web 2.0. So there needs to be connectors which software fintechs need to build, which will enable banks to quickly speak to a blockchain infrastructure. The third piece, I think, where the opportunity in the blockchain environment exists for fintechs is if you were to look at a large organization. If a large organization has multiple processes, for internal efficiency, can a blockchain network be deployed with various multiple partners of a single corporate? Take a simple example of debit card or credit card delivery. Okay. There's a bank, then there's a card producer, there's a printer, there's a dispatch courier, etc. These three at least which are there. And if you were to put all of this on an immutable blockchain ledger, it's a great problem to be solved. Right? So those internal efficiency projects will also come in with each of the financial institutions or actually manufacturing companies as well, looking at that space.
No, I think very interesting, aspect. And we as TransBank, we've been, I think, collaborating, and we've been trying to solve the problem around the structured escrows or RERA. I think we're working on that use case. And today morning, we had a very refreshing session with Saudi Central Bank. And of course, a lot had been talked about payments. But the moment I mentioned about the escrows space, there was an excitement. Said, yes, that's a space which globally we want to address, because B2B by far process humongous amount of transaction, and that of course brings us to the bring us back to the CBDC aspect. Right now, of course, there's one element what we have seen are flat currencies or cryptos, but I believe CBDC have actually taken the pole position, probably because of the regulatory shift of thought processes, right? We heard Nimala ma'am speaking about that yesterday, right? So Naveen, from your experience perspective, be it MAS or be it any other global regulator, how do you see this evolving?
Yeah, CBDCs, for the right reasons, get a lot of attention, right? Like, but if you think about payments today, most of the payments are actually not done on central bank money. Most of the payments are done on commercial bank money, right? Like, commercial bank money, M1, is 10 times that of M0, central bank money. That's not going to change in the world of digital currencies. Just because we have digital currencies doesn't mean that central bank money will suddenly start displacing commercial bank money and deposits will go away. I think that's not just my view, that's the view shared across by all of the central banks. So the point I'm driving at is while CBDC, central bank digital currencies, get a lot of attention, commercial bank digital currencies are even more important. The future of money will be commercial bank based. And that's not just because I come from JP Morgan, but if you look at the history of banking, I think that is where digital currencies are going to go. And when we started with JPM Coin, it is with that thesis, right? Like there needs to have commercial bank digital currencies solving for cross-border payments. What makes CBDCs attractive is the fact that they're a risk-free settlement asset. Like you can transact peer-to-peer with central bank money, but with commercial bank money, you always have to have basically the KYC aspects and how do you cross KYC boundaries. So there are those aspects. But the point I'm trying to drive is that while CBDCs get a lot of attention in cross-border payments, commercial bank money will drive the bulk of efficiencies when it comes to that, and they need to coexist with CBDCs.
No, of course, I think the way we all come from the diverse backgrounds and a lot of businesses over here, how did they transact, right? For example, a university which is collaborating with an Indian university, right? And that's one transaction probably where they look at ease of operating that transaction with, of course, bare minimum cost, because of course the money is being used for education purposes and all, right? So Sabrina, when we look at fund, or maybe when we look at HBAR disrupting this particular space, how important it is to actually base your thesis on blockchain for cross-border. So for example, we have spoken about problem statements and possible solutions. Do you really see that will also impact the B2B space as well?
Sorry, I didn't hear the last part of the question.
So the B2B space, the business-to-business payments,
right.
we spoke about, do you think that the problem statement, what we're talking about, do you think the business-to-business payments also will get disrupted with this blockchain technology?
Oh yeah, so of course, yes. I think, I mean, as long as there's a cross-border aspect, right? I think the challenges are the same. Maybe it's a bit more simple use case. When you get down to retail, then there's even more complexities to it, obviously. But the cross-border, the B2B aspect, I see it as, of course, part of the equation. And I also want to piggyback on what Naveen said earlier in terms of the adoption. CBDC is, of course, going to be transformational. But I think I agree with you. I see it as more of a long-term play. And if you look at the adoption now, most central banks are looking into it, researching it. Some are doing POCs. Still a bit early in terms of mainstream adoption. Stablecoins, commercial stablecoins. I mean, you have seen fintechs issuing all the way to large institutions. I think this is going to fill a gap for at least a number of years. Will they both coexist? Is kind of a debate. I believe they will, but there's different opinions there.
I think Naveen.
I just can't resist this, right? Like whenever stable coins come out, stable coins have been anything but stable, right? Like so.
Depends on the coin.
No, I think probably Kishore, we spoke about the incumbents versus fintechs or startups, right? Do you think that from the infra space perspective, and we had a debate about this when we were in the speaker's lounge, right? Do you think there's enough space, or it's a game of central bank or the big techs or the big banks or big infrastructure play like Broadridge?
I think there's a definite fintech play here, right? Like as Naveen was mentioning, that eventually the acceptance of CBDC right? And liquidity is nothing but acceptance of the value of whatever that you're publishing, right? So be it India CBDC or China CBDC or US Fed coin or whatever they want to call it, there has to be acceptance to it. And some of the acceptance will happen naturally if there is an independent network or an independent fintech player which brings the technology and infrastructure and support for many of that, right? And I do think that most of the governments realize it. I mean, if you've been looking at what's happening in the CBDCs, right? Just going back to CBDCs, right? Before we jump into use cases, some of the reasons why everybody is looking at CBDC, all the governments are looking at CBDC, let's just look at a macroeconomic and geopolitical lens. We all know what happened to the SWIFT network for the Russian banks with the Ukraine-Russia war, right? I don't think any country wants to be in that position in the future. And if you want to build your own decentralized economy, say the ASEAN region or South Asia region, you need to have a technology that aligns with that thought, right? Which is decentralization, which means that you don't want a single big large player enforcing how the network should work. So these are opportunities I believe that fintechs, a consortium of fintechs, public-private partnerships could solve for.
So before I come to Ashish, quickly, Sabrina, very interesting conversation. We want to conclude on this particular topic and move to Ashish for IBBIC. Do you think as a fund or HBAR foundation, do you think this really works, or you want to really? I think you already answered the question that you're gonna see fintech play or startups play in this, and our audience is quite excited about it. But do you think in the fund thesis typically is there any element when the IC or when the actual decision makers dwell about this point? Hey, look, this is probably be driven by regulator, and we may not really want to take a call. Do you think that thought ever occurs?
If you look at the CBDC space, of course, it's a long-term game, right? And you never know which players are going to be first, and there could be some displacement from the central banks themselves as they become more sophisticated. Maybe one day they will say, "Hey, I don't need a third-party technology. I just want to build it myself." That's possible, but I also think that there is a place for startups to innovate and to serve countries that maybe smaller in scale, maybe less sophisticated in their IT expertise. So yeah, I think it's going to be a multi-segment kind of market, and there might be countries that go at it by themselves, but there might be, I mean, and again, to solve for the cross-border issue, you need some level of intercompatibility, right? So should one country dictate what a standard should look like? I don't think so, right? There's going to have to be some sort of consensus to bring up a blockchain term.
No, I'm sure a lot of people from the audience are going to reach out to you on your LinkedIn for this particular thesis. But coming back to Ashish, we all have been really excited about the work done by IBBIC, especially banks. What is the first use case you want to see, and how it's linked to cross-border remittances eventually? Because I think, of course, I have some kind of insider over here, information over here, but I believe the problem you are solving eventually, the real problem which will be solved is on cross-border, than the India-specific use case.
Yeah, certainly, Vaibhav. So the first use case which we are putting out is on the trade side, which is on the supply chain side. Where we are trying to build a invoice registry or invoice fingerprinting solution, which will then enable us to power trade more from a financial inclusion perspective as well. And linked to that is the entire trade digitization. Just like cross-border payments have not been digitized well, interbank trade has not been digitized to a large extent, and there's a huge opportunity. For all the fintechs who are wanting to build that, please join hands with IBBIC, and we'll be happy to collaborate.
TransBnk.
Yeah, of course. yeah. And the idea is first, let's make it happen in the Indian market, and as we go and do it in the Indian market, hopefully there'll be other players who will do in different geographies, and then we can collaborate with them with interoperability so that we cover the globe.
I think very interesting aspect, right? Globally, sometimes, of course, we really undermine the role of trade finance or trade, right? We've spoken so much about payments, but I think trade is one of the fascinating area, and transaction banking is a $1 trillion, market, predominantly because of trade and supply chain finance. So, Naveen, from your experience perspective, do you think in next 1 year we'll see a use case around this?
Yeah, so I mean, compared to payments, right? Like trade is an incredibly harder problem to solve. Yes. Like simply because of the number of players involved in the ecosystem. I mean, if it is hard to get a few banks onto blockchain, try trade finance, right? Like, I mean, so at least our ambitions are, first to solve for payments. Yeah. But just broadly, generally on that theme, I do think that if you look at the history of infrastructure, right? Like whether that is Swift, Visa, MasterCard, CLS, almost all of that has been private sector driven. And we think that here as well, whether that is trade finance networks or whether that is cross-border payment networks, I think private side and commercial banks have a huge role to play.
No, I think, and that brings us to Kishore. Do you think in the entire evolving scenario, I think everybody over here would agree that retail payments, would of course the problem which touches everybody, every individual probably in Africa or Europe or India, and transferring money, student money transfers, and so many real use cases. But do you believe the trade and supply chain finance problem is actually, I know it's a large one, but do you believe it's a very large opportunity, and fintechs should look at that, solving that with your help?
Yeah, definitely. We are always happy to help. Trade, supply chain, cross-border FX trading, just capital markets. All of this are huge opportunities for fintechs to look at, right? In India, I think what's happened obviously with the UPI success is, and also the population is, I think we are doing the right thing by focusing on the retail. But globally, and Naveen probably can allude to this, is the market for B2B transactions and the institutional volume is huge. And there are plenty of opportunities for Indian fintechs to look at how do we solve for some of these areas, right? And if there are fintechs or fintech entrepreneurs here listening to us, please do look at some of the problems that's happening in the B2B space, right? Like as Naveen mentioned that, Broadridge, one of the problems that we are solving is for a lot of people would understand what a repo trade is, right? A short-term loan. If you were to do a short-term loan today, very few markets support you intraday loan arrangements. It's always overnight, minimum, right? And if you're a treasurer sitting to figure out how do I optimize my liquidity challenges, and I have fixed income assets sitting with me, how do I use a blockchain technology to solve for, right? And we've been able to solve the collateral side of it. We have large banks on it, and our friends at JPM are looking at the other side of it, right? The cash side of it. How do I do the tokenization? And which is why we need a stable coin like a JPM coin or a CBDC to come into play. But imagine if we were to build infrastructure to support each of these coins separately, then the friction is going to exist, right? And those are some of the opportunities fintech should be starting to think, like how do I build a network, or how do I partner with a JP Morgan or an HBAR or a Broadridge and the other banks to build the infrastructure, because everybody is going to be comfortable if the infrastructure is owned and managed by an independent, trusted entity rather than one of us.
I've got a love letter from the organizers about wrapping up. So, but anyways, we got 5 minutes. Probably, this is one topic where you would, of course, can talk for ages. But I think we would also like to take a couple of questions from audience. I'm sure there will be many. We'll look at two. Yes.
Hi, panel. Very interesting discussions. Hi, Ashish. This question for Naveen. So Naveen, we have been working very closely with JP Morgan on tokenization of assets, and so far, UK has announced tokenized deposits to all the banks. I understand that JPM coin is a private coin. It's not to be traded in public. It cannot be transferred to non-JPM customers. Do you guys have planned to go on the tokenized deposit in UK open market?
Yeah, that's a great question, right? Like, So JPM coin, when we branded it in 2019, calling it a coin seemed like a good idea. Not anymore. So we are rebranding it. It's actually a bank account on blockchain. That's what it is. That's the reason why it's not like traded like a stable coin. We are, very innovative. We are forward-looking, but at the same time, we are very conservative, right? Like driven from our home regulators. So till the point you have clear regulatory frameworks where you can cross the KYC boundary, as in a coin issued by JP Morgan should be able to be transacted and held by a non-JP Morgan entity. Till that framework is established, we are never going to be able to do a true token-based form of money. I think regulators are getting there with Japan, with Singapore, establishing clear laws. Stable coins have an advantage there because if you have, like, for example, USDC issued by Circle, you don't have to have a relationship with Circle to hold a USDC. That's very different from banks. I believe that's a little bit of regulatory arbitrage. I can very openly say that. But we being conservative, we've not yet gone there, but that is our attempt to go there with deposit tokens. But we'll only get there once we have regulatory clarity.
So I think MasterCard is doing a lot of work. Probably we can catch up on that.
So, one more question probably?
Yeah, one more. We can entertain one more. That's about it. The person on the right.
I can see.
Yeah. The blue color. Yeah, that's about it. Final question.
Thank you for the discussion, guys. I think blockchain started with Bitcoin in 2009, and Bitcoin is currently standing at $23,000, $24,000. I just wanted to know, cross-border transactions have already been established. I'm a user of Bitcoin, so I receive money from my relatives in Canada and US, frictionless, low transaction fees, immediate on a Saturday or a Sunday. How do you see Bitcoin playing out as a parallel to coins, private coins?
Good. I think something which we skipped the entire.
Yeah.
So it's DeFi and crypto. Actually, we did speak. It's a massive topic itself. But I think quickly, Sabrina or Kishore, you want to take?
I can take this one. I think Bitcoin it was maybe one of the first use cases, right, for cross-border payments. But at the same time, it's not stable, right? It's volatile. So that's one thing. And then second, the transaction fees are not low. So it doesn't work for micropayments or small value transactions. And of course, the scalability, right? It takes you, 20 minutes or so to an hour to get your transaction processed.
Right, so there are layer 2 technologies being built like Lightning, if you've heard of Lightning,
Correct.
So, which allow or enable
cross-questioning for later. Sorry.
If I may, I think this is my personal view on this, right? I think there is a role for Bitcoin, definitely. I would be very shocked if institutions look at Bitcoin as a cross-border currency for their settlements. There is a role for Bitcoin in the retail world, definitely, and all the institutions will want to offer crypto advisory at some time. They were already doing it till we hit the crypto winter, right? We will start seeing the convergence of crypto and digital assets. But for institutional settlement, if I am a trader at Goldman, I'd much rather prefer a JPM coin to settle my assets rather than a Bitcoin.
And maybe just to take 5-10 seconds,
10 seconds.
The final statement. The core fundamental rule of payments is having transparency on which are the parties you're facilitating the money transfer to. With Bitcoin, you don't have that. So while you get a lot of efficiency, it breaks the cardinal rule of payments, and that's where the regulatory arbitrage comes in. But anyway, that's all we have time for.
No, amazing. So wonderful. So thanks everyone. I'm sure the discussions and conversations will continue. Our guests from esteemed guests from Singapore are here to stay for a couple of days. I hope Sabrina is flying out. I think tomorrow morning. But I think we'll continue the offline discussions. I don't want to take the time from next panel. So thanks everyone, and thanks Ashish, Sabrina, Naveen, and Kishore, of course, and thanks everyone from the audience.
Thank you so much.